All right, so just to frame the discussion a little bit, I guess the AI crypto narrative has evolved in the past couple of years, I would say like 2 years. So like, what is your current thesis in AI crypto space? How has it evolved, and why is it exciting for you right now personally for your institutions? And whoever wants to catch that one first, go for it.
All right. So investing in AI crypto, like from a year ago, it was super narrative focused on the liquid side at least. So you're looking at basically the AI agent Meta, which sort of popped off in maybe September, and you were just investing in like GPT wrappers and a bunch of BS loosely related to tokens. Before that, it was mostly just focused on middleware. You saw a lot of like the decentralized AI folks, whether it was decentralized inference, decentralized training protocols raised from the hyperbolics to Noose, research, Prime Intellect, etc. What we're seeing this year is basically AI mature more so on the consumer side and giving us investors a chance to look at a lot of projects, whether they're building DeFi vaults, AI-oriented DeFi vaults, or any sort of other project that might be capitalizing on like Base's X402 thing. That's basically how it's evolved. We've seen it go from middleware to narrative chasing to a focus on consumer applications. So.
Yeah, I can go next. So at Coinfund, we started investing in decentralized AI a long time ago with an investment in Jensen several years ago. And since then have mostly focused on the infrastructure side. We invested in Pluralis, Prime Intellect, and several others along that track as well. And I think this thesis there partially is, it's a bit of a unique answer, but it's kind of funding companies that are building a future that we want to live in terms of, do we really want like Open AI and a couple of other players to control like unilaterally control the most powerful technology that will exist? And so funding companies that are able to distribute not only in incentives but also ownership of those models to the people that contribute to them and to whoever wants to invest in them. So I think that's what's really excited us around in the past several years. I think definitely agree on the fact that now, as AI is becoming more and more commercial and people are starting to really integrate it on a mainstream level into their daily lives, there's a lot more on the consumer side that's very interesting to see from an investment perspective.
Well, I think we believe really crypto is the core economic layer for agentic activity. We're a large 80-year-old legacy active asset management company. So we want to understand the capabilities of agents and their potential impact on, we're in the business of offering advice to clients around, their finances. We manage other people's money. And if there's an opportunity for alpha, we're always looking for, whether that's technology driven or, human driven. We have clients in over 150 countries. So a 24/7 market needs this technology to really operate effectively, because I need to sleep.
Yeah, I think that's where a lot of the value from automation is coming from. And we had a quick chat with Lou before the panel and discussed Benji, one of the products that Franklin Templeton is running. And so you guys are already quite deep into onboarding clients, institutional clients through on-chain. Where do you see agentic AI fitting into that in 2-3 years?
It's tough to say if it will. I can tell you that with our global clientele base, we're still having discussions with large institutional players recommending why we believe digital assets are an actual asset class, let alone how much of their portfolios we recommend them allocating to that space. However, with a product like Benji, which is a tokenized money fund, there's going to take some time, at least on the regulatory side of things, understanding how those managed products can integrate into DeFi protocols that can then potentially interact with agents. We're still super early, and we're still kind of understanding the landscape and the potential, but we certainly do see the potential.
All right. Yeah, it seems like you guys are being like cautious about what's happening right now, and trying to see where it fits. Mitzach and Joe, do you guys have any like contrarian beliefs to like the mainstream narrative in AI Web3 that you would like to share with the audience?
Yeah, I'll go. So like earlier this year, there was a DeepSeek moment where basically completely oriented the way that a lot of the current AI projects from Open AI, Google, etc., were developing their own LLMs. We saw data, synthetic data, matter a lot more than previously. Basically, that you could train powerful models that were more powerful than last year's off of synthetic data through reinforcement learning. And basically, my thesis or my contrarian viewpoint is that synthetic data is going to end up mattering less, and we're going to need to focus on new ways to acquire unique or bespoke data. And I think that's going to be probably best represented through through collectives of specialized intelligence, incentivized in maybe a way via trading. So like one way we've expressed this opinion is through post-fiat. Post-fiat is building a few things, AI for consensus, but then also building a collective contribution layer to help folks make better trades. So like one of my thoughts is like, what if AI could have access to Bloomberg terminal chats? You'd probably get an assload of alpha from something like that. And I think that's, that's basically a way in which post-fiat is building a very unique and powerful data collection layer.
Yeah, I think we're investors in Giza, and they are very obviously integrated into this agentic DeFi story. I think from a retail perspective, especially if you can wrap risk controls and vaults around it, it makes a lot of sense to happen in the near term for retail. I think institutional is going to be a little further off for sure. I also think it's a question of what agentic DeFi is. Like it kind of depends on how you constrain the definition. From a pure like agents moving stuff around perspective, might you have competition with regular vaults, might take a bit longer to gain like real mainstream adoption. There's also companies like True North, which we're not investors in at this point, but they're doing something interesting in terms of like Gen AI interface for trading, of like giving you all the information and tools you would need to understand an investment fully, and then you're the one who actually presses the button, guided by AI. So I think it's a broad spectrum of things people are working on in the space.
Yeah, I would actually want to unpack that a little bit, because you're touching on a lot of ways AI agents can add value. So either it's providing advice on the existing asset classes to retail audience or maybe like institutional funds. It also can come in as an autonomous system that does the trades and optimizes liquidity and whatnot. So I'm wondering, like, from Lou's perspective, because you already shared, Joe, like what you were seeing. So maybe Lou and Mitzach, do you want to kind of comment where agentic AI, where like AI in general fits in the most in this kind of life cycle of financial products?
I would say it's more, at least today, biased to AI assist more than really agent and decision making on behalf of clients or asset managers. One of the challenges for us as an institution is how much due diligence is required for your counterparties, whether it's we have a new trading shop partner. If we want to use leverage, there are committees, counterparty credit committees, they're digging through financials. That process of due diligence, really with agentic finance, that framework is evolving. Like there really isn't a framework yet, and not enough data for someone like us to really evaluate before we could recommend a strategy to our clients. But again, still very early, and it's the teams building now that we're still excited about the potential of what they're doing.
Yeah, I think a lot of the ways we're going to see agentic finance kind of evolve is just theoretical at this point. So, like, Coinbase seems to be stacking its chips behind this X402 status code idea, which is just basically agents autonomously making payments. On the trading side, I think agentic finance is going to be extremely important in the sense of how you limit its abilities to not screw up your own hedge fund. So, like, hedge funds will consider allowing agents to potentially make trades on their behalf because agents can analyze things a lot quicker than humans. Basically, there's a latency between when a headline comes out or something interesting happens in the news that could affect your portfolio or change the macro environment, and you're going to want to front run everybody else and make that trade sooner than them. But you also want to make sure that the agent doesn't hallucinate or that that they don't hallucinate or basically blow up the fund on a random trade. So it's going to be extremely important how these funds kind of put in limiting factors that lower the entropy of an agent's output to make something like an agentic hedge fund or agent finance capabilities really useful on the trading side at least.
One thing to maybe add to that is, like, in that sense, there's an argument for the fact that agentic finance already exists, because hedge funds are for sure using robots to trigger sells, buys, depending on news. They're kind of already using this. I think what's interesting about agentic DeFi is you're able to now take those, open source them, and have them for anyone to take advantage of.
What's the value for someone who creates that agent to share that with the rest of the ecosystem? Because it seems like the most obvious choice is just to run that strategy on your own.
Yeah, so this is something we at Coinfund have been talking about a lot internally. I think it comes down to, you could kind of make the same argument on Athena itself. So Athena, doing the basis trade, could have ran a hedge fund, and that could have been the story of, we're running the basis trade, we're attracting capital, we're just running a normal hedge fund. If you give it to the public and allow anyone to invest, yes, your scrape is probably going to be lower and it adds some complexity, but you can eventually become so much more. And we're kind of seeing that with Athena of, like, okay, now they're a stable coin being integrated into a lot of different, exchanges and other use cases. So I think you can start at this agentic DeFi thing, but then you can become like a layer where anyone can plug in and then get capital from people depending on how your strategy is performing. It can become a lot bigger than you can be on your own.
Yeah, I completely agree with that thesis, and I'm glad that we're touching on it, because really opening it up to the broader community opens up really the scale for the agentic finance, because otherwise it's become like very siloed ecosystem. So just to kind of take a step back, like, two main themes that I'm hearing from you guys is that a lot of the application for AI in crypto is going to be around financial products. And one of the biggest concerns is risks. So my question to you is, like, do you feel like if we evolve in this agentic AI Web3 narrative, we would create a bunch of highly correlated assets that would swipe out the liquidity from a market the same way the October 10th ETH flash crash happened? So do you have comments on that?
Well, I would say there's obvious cascade risk. That's one of the unique opportunities for us as financial analysts, really, is you're not really extracting value by underwriting the activities of one single agent within an ecosystem. You have to really examine the behavior of all agents in that ecosystem to understand if and when alpha is being generated, because especially if there's like reinforced learning and they can effectively kind of copy each other, obviously alpha shrinks down to zero, and then it becomes, well, who's got the most compute power, who's tapped into the best LLM, and who has the lowest latency, because set parameters will have agents doing the same activities likely at the same time. So interesting behavior that we're just starting to examine.
I think for me it comes down to companies that analyze risk professionally, putting safeguards around it, vault infrastructure is pretty mature at this point. Like Veda is a portco, and they're doing that as well. So I think you combine a bunch of the stuff that's already being done, you put some rails on what the AI can and can't do, and you can kind of feed back into it of like, this is an analysis of the risk of what you're doing and the correlation between assets. So I think it's a solvable problem for sure.
And I would add that proof of reserves, it should not be a suggestion or really an opportunity for a team to say, look how great our protocol is, look at our proof of reserves. It's for agentic finance to take off, that all of that information has to be public and accessible. It has to be a standard.
Yeah, we're running a little ahead of my questions, because the next one was what should be really in place. But before that, I actually wanted to double click a little bit on what you, Joe, was saying, because I think we should explain a little bit more how vaults play into this new realm of agentic AI on chain. So you mentioned guardrails, you mentioned limiting the exposure, constraints. So can you maybe give like a 50,000 view to the audience on how vaults are coming into this AI agentic narrative and where do they add value?
Yeah, so I think the way we've had a thesis on vaults for a long time and have been very excited about it. I think the core of it is you're providing a container for DeFi strategies to be put in so that it induces trust in the ecosystem of like, okay, I can put my money in this and I know what the risks are, and there's very little, there's a protocol that is designed to block like outside risk from really occurring. And so I think what that leads to is an environment where agents, in addition to the humans that are currently playing in that space, agents can also play in that space. And it kind of slots in very well to the current vault infrastructure space. I think there's work to be done as agentic DeFi gets bigger and bigger around customizing vaults specifically for that case. But I think in the future what you're going to see is you're going to have professional vault companies like Mev Capital and RE7 and others. They're going to be running some human-run strategies. There's going to be some agentic DeFi, and it's going to be a marketplace. And you'll kind of see who wins in terms of yield, who has the least risk, et cetera.
Yeah, great. I also wanted to give you guys an opportunity to comment on what really needs to be in place for this to take off. And when I say that, I think about it from three standpoints. From the technology standpoint, and we already touched on the vaults a little bit, but also from regulatory standpoint, like what are we still missing? Like where those protocols that are popping up are still not hitting the mark for institutional funds. And then third one from like purely operational standpoint, like where do you see we need to upgrade? And we at Theoriq are very interested to hear from you about that, because that's exactly what we're doing, and I'd love to get your feedback. I think Lou touched a little bit on it. If you want to like expand, because I think it's a big topic, and from our conversation before the panel, you have a lot to add there. So.
Sure. I mean, I think a lot of what happens in business relationships, especially in financial services, is around what happens if something goes wrong, which usually means lawyers. And how do lawyers, I know there are some here who I've spoken to actually, where can they come in and I guess help in the configuration of an activity of agents themselves? We're an RIA. For anyone who doesn't know what that is, Registered Investment Advisor in the US, which comes with a lot of rules around what we can, the types of activities and safeguarding of client assets, how we treat those assets when we're actually deploying into specific investment strategies. It comes down to really boring operational things like the ability to pre-fund a trade is very difficult for someone with my regulatory oversight. Keeping assets in qualified custody is very limiting for us as a firm in terms of our ability to actively deploy into DeFi protocols, because that when you're in the protocol, that means you're out of qualified custody, which unfortunately is very limiting. But there are interesting structures that are emerging around just not the vanilla asset management model, like vaults in particular, are showing, they're really the first signs of linking what we would describe as TradFi strategies with actual DeFi protocols through those wrap tokens in the vaults. And we're really excited about their really distribution potential, because I see it as what is going to turn into what we call it a TAMP, a turnkey asset management platform. I think that's what on-chain asset management is, those marketplaces, and we're still excited about that potential, despite, you know, I had the varying levels of discussions I've had with lawyers from 5 years ago to today. I won't get into that right now, but they're coming along, which is very encouraging. Instead of just, they're not saying no anymore. It's, well, how can we do this? Which is encouraging. So,
Do you guys want to give your perspective on what we're missing still?
I'll just say we're probably missing a lot of experience. We're missing blow-ups. Like, shit's going to need to break in order for us to really understand what we need to lobby for and present to legislators to actually build something effective to the point at which a Goldman Sachs, Franklin Templeton even, is going to adopt basically agentic frameworks within their own asset management structures. So it's going to fall a lot on basically our ends, the liquid funds or the venture funds or the capital allocators within the crypto space, to really break things, make mistakes, expose the risks for us to be able to have anything to come to the legislators with for reasonable legislation.
All right. Yeah, I think there is still quite a lot of things that need to come into play, but you know, from my perspective, because I'm also coming from traditional finance background, and that picture over there was taken when I was a part of fintech company and FINRA and RIAs, where things that I would come across pretty much every day. And I think like 5 years ago, I would kind of hate the fact that we have to accommodate those terms and in crypto. But now, as you know, things are evolving, and you start understanding the real impact that the space has, and you know, the potential risks. I do appreciate that we started talking about like the fiduciary duties as part of you know, AI generated strategies, that we started talking about the regulating, we started talking about operationalizing vaults, and now they become not just pure technology, but more so financial instruments that can be, that you know, we can onboard into, right? Okay, so I think that was like very interesting, a couple of things that I highlighted for myself. So let's maybe take this into perspective. With all the things that you guys mentioned, with like all the requirements that are still not there, where are you focusing your attention right now at the intersection of AI and Web3? Like, is it still the infrastructure? Is it like full-on vaults? What kind of projects? Maybe you can, you know, you've already shared some names, Joe. So what are those avenues and niches of crypto AI that you're focusing your attention right now?
Yeah, but maybe I could start. Yeah, I think training has been a big focus for us. I think when we think about like the value, especially where we are in the model building cycle, I think there's an opportunity, if you can crack a few very hard technical problems, to build a model, to train a model in a decentralized way. And that's like a huge, if that ends up happening, that's a huge unlock. I think like one of the stats that I find super interesting is the Bitcoin network, the amount of power it consumes is on a level similar to what like all of the top AI companies in the world are consuming in terms of energy. So if you can take that combined power of everyone on Earth and have them produce a model that's on that level, and if you can figure out the technical problems to be able to do that, that's super interesting. So that's where we've historically focused a lot. We've made a bunch of investments in that space. And yeah, again, I think focusing more on the middleware and consumer side now as things start to get built out more?
I'll go. So middleware for values, and then in the shorter to midterm, I guess products for like potential growth and actual cash generation here. So like when I say middleware for values, decentralized training, decentralized inference, none of it really matters right now because we all use ChatGPT, we all use Claude, we all use all these other LLMs, and they work great. But at some point, governments are going to censor. It's going to become critically important that basically there's not a monopoly on all these models that we're using today. I think at some point these centralized companies and these monopolistic companies and the government is going to make it explicitly clear that middleware is going to be very important for decentralizing that part of the AI stack. And then as for any shorter to midterm opportunities, I'm looking at ways that AI can either reorient crypto or trading. So like one of the investments we made at the end of last year was post-fiat. They're looking into using LLMs as basically a new form of consensus. So consensus is extremely inefficient in a handful of ways, whether it's just wasted compute in the form of Bitcoin mining, not necessarily wasted compute, but in the sense of those computations that Bitcoin's performing doesn't really add value in the sense of that activity could be used for inference and whatnot. And then also trading collectives in the sense of folks giving their information or filtering their information through LLMs like a Bloomberg chat-esque type of ordeal, and then gaining alpha to an LLM hooked up to a bunch of different traders within that collective to provide interesting insights into the market that you can't necessarily get from articles or explicitly public information. So we've been looking at essentially both sides of the AI crypto matrix in that way.
I would just add, infrastructure still improving, but we're absolutely interested in the picks and shovels and middleware that really does continue to help set the foundation. Teams that can establish data moats, because I think a lot of this is still very much a data play. So interested in oracles that are interacting with agents and providing, their agents can only operate with good data, like effectively with good data. Otherwise, you see bad outcomes. So teams that are providing those data sources, something we're looking for. And if you're building that, come talk to me.
All right. Joe, would you like to add something?
No, I think they covered it well.
Yeah, so I think we have just 1 minute, and Lou already dropped the CTA. So do you guys want to also maybe share with the audience, what they should be, looking forward and excited about in what you guys are doing?
I'll just say we're more excited about what everyone out here is doing. I'm just a stodgy old financial services guy.
Yeah, I think similar sentiment, like excited to see what everyone is building at the moment. I think in terms of like what I'm most excited about, I think continues to be like decentralized training is where I think I get the most excited personally. Really hard problem, but that's what we're here to solve.
Yeah, and reach out if you're building AI middleware, building anywhere along the AI stack, agents, etc. We're just capital allocators. You guys make cool stuff. So.
Awesome. Well, thanks a lot, everyone. Great discussion. I'll take all the insights back to my product team now. All right. Thanks, everyone.